Welcome back to the channel. Today we're going to be talking about an investment strategy known as dollar cost averaging. But before we begin, please note that I am not a financial advisor. Alright, so dollar cost averaging is generally known as a non-emotional investment strategy, where you systematically invest equal amounts of money at equal intervals regardless of the price. And so dollar cost averaging is kind of like, every paycheck I'm throwing $100 into a stock versus taking my year's salary and throwing it into one stock on one day, right? So in today's example, we're going to be using PayPal and their historic stock price for the last couple of months to show you how dollar cost averaging works compared to throwing a lump sum of money into something. So let's dive into Excel and kind of go over this example to better understand how dollar cost averaging works. Then we're going to come back and explain the advantages of dollar cost averaging and why investors might use this strategy. So let's dive into Excel.
All right, so this morning I grabbed the historical data for the stock prices off of Yahoo Finance for PayPal or PYPL. And here's a graph of kind of their stock price from the last year, right? So the 9th to the 9th. All right, so let's take a chunk of this data. Let's just use this data right here. So it looks like we'll use 4/30, so April 30th to 6/24, so June 24th. All right, so, and this is the date of the stock price, the open price of the stock, and the close, the high, the low, and the adjusted close, and the volume. We'll just use the open price for this example, just to keep it simple. So let's find 4/30, and we're going to copy all the way down to 6/30. We're going to go ahead and copy that. And we're going to just go ahead and paste that in this column, right? So we have all our information here, and that's a total of 43 days. So let's say we have $10,000. So in this example, we're going to compare the difference between throwing money in on a stock at one time versus throwing it in gradually or dollar cost averaging. So for example, we have $10,000, all right? So that $10,000 is going to go straight into PayPal at $265. And that gets us 37.74 shares of PayPal. But now let's say we'll take the 10,000 and we'll divide it by 43. So now we're going to be so for 43 days, we're going to invest $232.56 every day. So still $10,000, but over the course of 43 days rather than one sole day. So then what we're going to do is we're going to take this, divided by that, divided by the stock price, and we're going to lock this so that cell stays the same. And we're just going to drag this all the way down for the 43 days. So having this all highlighted, we can see that we'll have 38.13 shares versus the 37.74. 38.13. And if we do the difference, by dollar cost averaging, we were able to buy an extra 0.39 shares. Now that might not seem like a lot, but over time, I mean, that can just grow exponentially, right? So that's a 0.39 share difference. But how much is that in terms of money, right? So what we're going to do is we're going to take the 37.74 and we're going to times it by the last stock price of 291.53. And that will give us a total of $11,000.13. I'm kind of having things all over the place here. Let's make this look a little nicer. So we're actually going to drag that over here. Add another column, and we'll add, and so we essentially earned $1,001.13. So now let's compare that to the 38 shares we bought by dollar cost averaging. So we'll take the 38.13 and times that by the last stock price in this group, and we'll make the difference, and we'll subtract that from 10,000. So if we compare the two, we made an extra $115 essentially from dollar cost averaging rather than investing all that money in at one time. So dollar cost averaging is essentially lowering the average price at which we bought the stock so that we can buy more shares and essentially profit more than if we were to throw a lump sum or just a big wad of cash in at one time. So investing consistently over the long run, in this case, made us more money.
So the idea behind dollar cost averaging is that the price you pay per share in a stock, for example, is going to be less overall. So your average is going to be less rather than if you pay a lump sum, as we explained in the example. Now, dollar cost averaging essentially does two things. It eliminates emotions from investing because you're not really thinking about price. Generally, you're investing the same amount of money at the same time every week, every month, every day, or however often, regardless of the price. So it takes emotions out of investing. It takes timing the market out of the equation because a lot of investors think they need to time the market, get in at the best time. But dollar cost averaging shows that consistent investing can work in the long run. And most people don't have a lump sum of, $10,000 to invest in something at one moment. They'll get $100 from a paycheck or maybe $50 from a paycheck. And consistently investing that will help you dollar cost average. And when we're talking in terms of stocks, it helps the overall price you paid for that stock to go down, which means that you can own more shares of that stock for less money than if you were to throw all your money into it at one time. Now, granted, the strategy isn't foolproof. If the stock never goes down or the investment never goes down, then you're missing out. But it's important to know that you can never time the market. So being consistent is more important than learning how to time the market, because timing the market is just not a consistent practice. It's not something you can put into a regular strategy when investing your money, because nobody can predict the future. So overall, dollar cost averaging, eliminates that factor of emotion, and it eliminates the need for you to time the market. Just overall, be consistent with your investments. Don't just throw $100 into it and call it good. Consistently add money to that investment if you believe it's worth the investment. All right, well, hey, thanks for sticking to the end. Please subscribe, smash the like button, and have a great rest of your day.